Hello and welcome to the weekly outlook. We're going to go through the calendar for the week ahead and have a look at the charts and see what we're going to be trading and where we're going to be looking at getting into those trades. Okay, so Sunday we've got a few announcements out on the Japanese yen. Nothing major. We've got final GDP quarter on quarter, current account, bank lending year on year, final GDP price index year on year. All figures there not expected to be too bad. In fact, a little bit of a upbeat forecast there for those Japanese yen figures. We have had a fairly big rally after the non-farm payroll data came out on Friday, so we could face a bit of a pullback, maybe to some other areas of support and resistance. Overall, we're still looking at a bullish trend here up until I would say 125. Where we may possibly find a bit of a cap going on there. So, in the near term, we'll probably be looking at pullbacks to the 1200, the 123, 129, possibly 128 area before we see some further upside. Keep an eye on that. It's not the most important one of the week, but certainly one that you can trade with conviction in the overall direction. Okay, so moving through. Monday we've got trade balance on China, expected to drop. Chinese economy is slowing down at the moment. May well affect Aussie dollar, but there's not much else out on the Aussie dollar this week. We've got the NAB business confidence on Tuesday. Now, excuse me, Aussie dollar fundamentally is still a bit of a bearish currency. We had a bit of a neutral tone coming from the RBA last week on their rate decision and statement. And they're still trying to talk this down. They're still saying it's fundamentally and historically too high. Their Goldilocks price really is between 8.5 and 8,000. So we've dipped into that now. We're about halfway through. So it's going to be interesting to see what happens with data when we're down to that 8,000 level. Obviously, the weaker currency is going to help boost their economy with cheaper exports. Etc. etc. So going to be keeping an eye on it when it gets down to that 8,000 level, but at the moment I'm just selling it down to there for the time being, especially if data continues to be poorer. The NAB business confidence on Tuesday, there are no expectations for that, but it did come in slightly weaker last time. It dropped from 5 to 4, so not a big drop, but we'll see if that recovers a little bit. We could get a bit of a pull up on the Aussie if that happens. We'll be looking to take sell positions again. At the moment, I'm really looking for pullbacks again. As you know, that's how I trade. I'm looking for about 8.4, possibly 8.425 for sell positions there, which is pretty well much where we took a sell position last week as well. And again, not much data out on the Aussie next week. We've got pound manufacturing production PM month on month, expected to drop again on the pound. Some data has actually been coming out slightly better than forecasted on the UK at the moment. So again, we're going to keep an eye on that. I still think that we're getting now close to the bottom trading range on the pound, as we've still got those split votes of 207 on the UK, and we will find out more. Obviously the big day here for the UK is going to be when we next have that vote decision, and obviously the next sort of CPI data on the UK, which is going to be the 16th of December. We've got CPI year on year. It dropped down to 1.2, then rose back up to 1.3. If this comes in around about 1.4, then 1.5, then we will see a bit of a rally on the pound. But like I say, this isn't until the week after, so we'll be looking at that next week. So not really much else on the pound, so just going to be holding positions on there until that date at the moment. Okay, so let's move through and have a look at the euro. Although we've not got a great deal out on the euro next week. Actually, sorry, I'm just going to go back to the Aussie dollar because I just forgot to mention about Thursday there. The reason we want to try and get into this, obviously, is the pullback. On the pullback is because as later on in the week we've got the unemployment change and the unemployment rate expected to come in slightly higher. The unemployment rate at 6.3%, a rise from 6.2%. So this could really add fuel to that fire and push that Aussie dollar further down. So that's at 12:30 a.m. on December the 11th. So we're going to have to keep an eye out for that as well. The only other one that I'm really looking at, again, like I say, is the euro and the New Zealand dollar. So let's go over to the euro quickly. We had the meeting from Mario Draghi on Thursday, which pushed this back up when he said that QE wouldn't be coming until the new year, and trades obviously already priced it in to come in this meeting. So that was pushed back up, and then quickly it was mentioned that a package has been put together for January. So it caused it to drop again, and obviously the strong non-farm payrolls on Friday caused it to break below and make a new low there. I'm expecting this to continue down to 122 and eventually to 12000 over the coming few weeks of the year. Obviously looking for pullbacks again. We took trades on this at about 123 on Friday when it pulled back slightly. It could possibly pull back to 123.50, even 124. But I think we'll find that this is going to be pretty well much capped round about 124.50. You can see we've got quite a strong declining trend line going on there, and I don't expect that to be broken in the near term anyway. So although there's not a great deal of euro data coming out next week, the thing to be looking out for really is the strong US data. So we've got moving through the week up until 1:30 on Thursday. That's where we've got some core retail sales coming out on the US. But apart from that, it is fairly light as well. So we could just see the euro drifting down slowly until next week when we've got some more PMI data coming out from the various regions of the Eurozone. Okay, so let's move on to the last one, New Zealand dollar. It's not, a massively volatile week this week, but we have got some key announcements, one of them being the New Zealand dollar here. And let's have a look at that. Obviously, been dropping down. We have had some fantastic trades out of this over the last few months with since the RBNZ, since the Prime Minister of New Zealand announced the Goldilocks price has been 65 cents to the dollar. At the moment, we're 1,200 pips away from that, but we have been kind of hugging these different trend lines on the way down. You can see how they're drawn in there. We've had these breakouts. We've had some pretty poor gross dairy trade. The last couple of announcements have come out weaker. The first one was down 3%. The last one was down 1%. So that's been falling quite badly. We've also had, obviously, inflation has dropped now down to 1% from its recent highs. So I'm expecting slightly dovish tones from the New Zealand dollar. They're expecting their official cash rate, I should imagine, will remain the same at the moment. But we have got the press conference where I expect them to continually talk down the New Zealand dollar. Okay, so no matter what they do with the cash rate, they're going to talk this down and suggest that it's unsustainable and it's too high, and we're going to see falls back down to there. The opportunity to try and get into this is going to be on pullbacks to the 7-8 level. Okay, where we've got some areas of support back there. If it does pull back any further, then it obviously will be taking sales at higher prices. But it's important to remember that the downside on this is fairly strong. We've got fairly good conviction in this falling. So it's definitely looking for a sell trade next week. Okay, that's pretty well much it. We have got the SMB monetary policy assessment and press conference coming out 8:30 on Thursday. Still very close to that 12000 level, which is the floor that the SMB wants to protect. The question is whether the meeting there will actually cause any volatility in that currency pair. Until they actually intervene in the market, then I would suggest we're not really going to see a great deal happen. It's been drifting around quite a lot at the moment. We have started to see some spikes up, but again, it started to dip back down to that price with that weakening euro. They want to protect this floor, so ideally we want to try and take buy positions as close to that as possible. As long as it stays above there, then there's no real need for them to intervene. It's only when either the euro comes out with extremely bad news and it's very close to that they might suddenly buy, intervene and buy unlimited amounts of euros. But at the moment, I'm going to wait for that to dip back down there again before I take further buy positions. Okay, that's pretty well it, Jet. I hope you can make some pips this week, and I shall see you next week.